Good morning. Welcome to the April 26th edition of Advisory Live. I'm your host, Will Briganti. We're powered by Nasdaq IR Insight. Joining me today as my guest is Jason Peters. Jason is a financials analyst from Nasdaq Corporate Solutions. Jason, welcome.
Thanks for having me, Will.
It's good to have you back on the program.
Always great to be here.
So not only is today April 26th, but it's also NFL Draft Day. So the Cleveland Browns have the first pick.
That's correct.
The New York Giants have the second pick.
And the Jets have the third
pick. And the
pick.
football Jets have the football Giants, I should say. And the Jets have the third pick. That's your team. So who do you got?
Well, here we'd like with the first overall pick, if we were to have it, we'd be going with banks.
The banking sector. Okay. We're going to pick the banking sector first. So let's focus on that today.
Sure.
So Jason, my first question for you is how have the banks been performing given that we're in the midst of the earnings season?
Sure. As you all know, bank earnings season kicked off officially Friday, April 13th. And it was kind of an interesting day, being Friday the 13th and all, rather spooky day, if you will, because we had, great numbers reported, headline numbers from the majors, the bellwethers. Yet we witnessed the KBW bank index retreat by around 2%.
Yeah.
And I think that there was a lot of contributing factors to that. People were saying that banks were toppy. Some analysts cite toppiness in the banking sector. But I think that a lot of it was just more of a buy the rumor, sell the news type event, because we did have a nice run up, leading into earnings season. So once we kicked off, we witnessed a pullback. But I think it was again more of a buy the rumor, sell the news thing. And expectations had been through the roof, heading into earnings season.
And we saw a lot of buybacks, isn't that right? From that.
Correct. So another thing that I believe is, we believe here, that a major contributing factor is that leading into earnings, buybacks were on the sidelines, but during the days of actual reporting, we were the banks were in blackout periods. So once the earnings kind of were through, we witnessed an uptick again in the buybacks, which bode well for the bellwethers over the next 4 or 5 trading days. So that really goes to show that how much of an impact buybacks have had on these larger banks, in the past.
Jason, my final question for you today will be sort of an outlook for the rest of the quarter. So how will the banking sector shape as we get to the quarter end for Q2?
Sure. So quarter end and Q2, and additionally for the remainder of the year, we think that there's a lot of reasons that why you should be bullish on banks, why we like banks, and a couple of them really is we recently witnessed a rise above 3% in the benchmark 10-year yield this week. Now today we witnessed a slight pullback, which is kind of potentially why we're seeing a little bit of underperformance out of banks today. The 10-year ran into resistance that it had back at the highs from, it was late December 13, early January 14. So we kind of retreated a little bit, but post that, prior to that, we were looking like we were setting up for a technical breakout in the benchmark 10-year. So we'll see. It's just a slight pullback today, but if we are able to break above these levels that we reached yesterday, and those highs from back in late December 13, early January 14, I think that we're setting up for a move higher, which is going to bode well for banks. So in addition to the rise in 10-year, we're looking at traders are now pricing in potentially 3 more interest rate hikes for the remainder of the year. That's going to bode well for the banks in terms of the net interest margins. Deregulation has been a huge headline, and that's going to continue to impact banks generally favorably. And the strong economy, the tax cuts, and lastly, it's going to be the buybacks that continue to move this higher. We did have, and one other thing is we did have, a reemergence of volatility this year, and that volatility, although it has subsided, it's still somewhat here. So that volatility will bode well on the trading side in terms of revenues for some of these larger banks.
Yes, of course. All right. Well, Jason, we'll leave it there. Thank you so much for your very comprehensive take on the bank sector. We appreciate your insight.
Thanks again, Will.
All right. Good luck with the draft.
Thanks.
This was Jason Peters, a financials analyst here at Nasdaq Corporate Solutions. Thanks so much for tuning into today's episode. We'll be back with you with something new starting next week. Tune in. Thank you.